officials, the DG and your team. I welcome you all. The purpose of the meeting is to deal with the following matters before our agenda. So it's a busy day. I won't waste time by making some preambles, but to invite your constructive ideas into this particular meeting so that we build our department as well as our society. At this stage, I will request Braking to give us apologies if we do have any, but you are all warmly welcome into today's meeting. Thank you.
Thank you, Chairperson. Good morning, Chair. Good morning, honorable members. Good morning, Deputy Minister, and good morning, DG, CEs of the entities and the Chairperson of the boards. And good morning, colleagues, both from Parliament and from the department and the entities. Chairperson, the apology that I've received, it is from the Office of the Minister, which indicated that the Minister is attending a cabinet meeting. That's the apology I've received, Chair. And then in the platform, on the side of the MPs, we're having you, Chairperson, Honorable Tlomelang, Honorable Matulelwa, Honorable Jacobs, Honorable Lubengo, Honorable Mieni, Honorable April, Honorable Hendricks, Honorable Mabiga, and Honorable Tivilias. So if it happens that there's a member that I didn't recognize, may I extend my apologies and maybe indicate. So those are the members of the committee. And we got an understanding that since we've received the apology of the Minister, the Deputy Minister, Honorable Tipo Peters, will be leading the delegation. Thank you, Chairperson.
Thank you. Apologies noted. We'll now move to the next item, which is adoption of the agenda. Can I have a mover for the adoption of the agenda, which is before us? Honorable members.
Honorable Mieni, move that the agenda be adopted.
Thank you. Any seconder, honorable members?
I do second.
Thank you, Honorable Lubengo. The agenda is duly adopted. Can we now move to the next item, which is briefing on the 2022 to 23rd quarter performance report of the Small Enterprise Development Agency, where I will request the DM to usher her department. Over to you, DM.
Thank you very much, Chairperson. I just want to, as a upfront disclaimer, request the Chairperson's permission and the committee's permission that I switch off my video, because where I am, we've got load shedding, and I managed to get a corner where I could get network. So with your indulgence, Chair, may I be allowed?
Please switch it, DM. We are familiar to your voice, even if in dark cloud, we can hear the voice that this is the real one. Do that, please.
Thank you very much, Chairperson. Chairperson, I am and members of the Portfolio Committee of Small Business Development, the officials from the department, as well as members of the public who are on the platform or watching from the streaming lines. We are here today with the team of the department that will be led by DG to present the department and its entities' fourth quarter performance. I'll just give a few highlights, Chairperson, and you would remember that we did raise in the budget speech that the department paid 100% of all valid creditors within 13 days, 30 days. That is what we pride ourselves with. And through you, Chairperson, and in engaging with other chairpersons of portfolio committees, we request you to monitor and encourage other departments to do the same. We have been informed that about some of the payments were processed within 7 days, and it is something that really we need to sustain so as to be able to be a department that leads with example. The department's expenditure was 509 million rand against the projection of 512.8 million rand, with a variance of about 3.97 million, which is a 0.8% in this quarter. The department achieved 51.8% of a female SMS representation against the target of 50%. The department, in partnership with its agencies, implemented about 21 public engagements within the district municipalities, which was the target was 15 for Q4. With regard to SMME database, the SMME Business Index to identify levels of readiness and capability of small enterprises was implemented. A total of 56 against a target of 50 targets of products produced and services rendered by SMMEs and cooperatives were linked to domestic markets. Progress report on the review of the Business Amendment Bill and proposed changes was approved by the EXCO, which is on the 27th of March this year. Both the progress report and consolidated progress report on the finalization of SMMEs and cooperatives funding policy were approved by Cabinet on the 27th of March. The department supported 82 cooperatives versus 50, which was the target for Q4, financially and non-financially, something that we need to pride ourselves on. The National Integrated Small Enterprise Development Master Plan was implemented, or the Master Plan Implementation Report was approved. 5 municipalities were assisted with the rollout on the red tape reduction awareness program. And Chairperson, with regard to this, we believe that we need to increase and move at a faster pace, because 5 municipalities as at present is not going to be enough. We need to increase the pace at which we support our municipalities, and working together with COPTA, we believe we can accelerate the process. An assessment review report of SMME regulatory impediments to reform was approved on the 27th of March. And Chairperson, without going deep into the work that will be presented to you by the DG and his team and the entities, I would want to request your indulgence to stop at this particular moment and allow the DG and his team to go forward with the presentation.
Thank you, DM. DG, over to you.
Good morning, Honorable Chair, Honorable members, DM, colleagues on the platform. I'm not sure whether I should, as per the agenda, request the Seda colleagues to proceed as per the agenda. Thanks.
Yes, do so. You are ushering your department, DG. You are at liberty to do that.
Thank you, DG. Good morning, Honorable Chair and honorable members, Deputy Minister, the DG, the chairpersons and the CEOs, on the colleagues on the platform. My name is Pascal Mbata, the acting CEO of Seda. I'm trying to switch on my video, chairperson. But I am going to present the Seda performance for Q4. If through your permission, Chair, and the honorable member's permission, if I could switch off the video for bandwidth purposes, so that I will be much more clearer.
You're
but I
allowed
think-
to do that. You're allowed to
Yes.
do that still.
Thanks, Chair. Bracken, if you could assist with the sharing.
Yes, I've made you a co-host.
Thank you. Is my screen visible?
Yes, it is.
Okay, thanks. Thank you. Thank you, Chair. Once more, I will be taking the committee members through the performance of Seda for Q4 of the 22-23 financial year. I will then go in details where there are points to emphasize and highlight where there are points to highlight. Chair, the presentation will have the introduction, then we'll have our performance overview, performance information issues, will cover HR, financial, governance, marketing, and other key projects, which I will not go into detail, is for the committee members to also appraise themselves of some of the key projects that we involve ourselves in. I will then go straight to our performance for the fourth quarter. In the fourth quarter, we as an organization, we were tracking 20 indicators that we're measuring in Q4, and we're able to achieve 100% on 19 of the 20. And we only missed one performance indicator, which is the TTA, which is technology transfer assistance. Due to financial constraints, we're not able to meet that. We've been actually for the past 2-3 quarters, we haven't been able to meet that target. But we've aligned and enabled better planning in terms of finances for the new financial year, so that we're able to provide the assistance that we have to assist to provide. Chairperson, we also had under our dashboard summary, we're able to touch base with the clients in the following areas and be able to do assessments in terms of their business readiness, and also provide services to those clients. On the incubation program, we're able to, in the quarter, assist 2,507 SMMEs with the incubation program. That's a target of 2,500. Under the productivity improvement, we're able to achieve 569 with a target of 500 in terms of SMMEs that we're able to engage and assist in terms of improving the productivity of their manufacturing plants. As same as the quality improvement, also that we exceeded by far margin. We're able to do 1,377, the target of 750. This includes the work that we do from assisting with the clients to understand how they can improve the quality of their products in order to comply with all the requirements that are required in the various sectors, to actually then getting to do the work and assist them to improve the quality of what they produce. And then on the priority sectors as well, we're able to meet the target. And this is the SMMEs that we are prioritizing from our side to grow from a growth point of view, where we're saying we identify and we then work with particular SMMEs to grow them, so that in the near future we can create industries around those SMMEs, but also scale them up so that they're able to produce more. On the coaching and mentorship and training, we were able to reach out to 6,884 SMMEs through our coaching and training programs, physical as well as hybrid, because we do training now on the hybrid level as well, in line with the changes in technology, so that we're able to save costs and reach out to more SMMEs. I won't touch base on all of them. On the access point, Chairperson, For the quarter, we're able to establish or sign agreement and establish 34 Seda access points in the rural towns and rural areas. This is a target of 20. However, on an annual basis, this is the target that we didn't achieve, but on a quarterly basis, we did achieve, and I'll go through that when I'm getting to the annual numbers. Access to local markets, we're also able to achieve that target, and then international markets where we did a lot of, there was also a trip with economies where we exposed them to the market in Ghana as well, so, and other activities that we performed during this quarter, where they were able to go and showcase and sell their products in Africa and other international markets. Chairperson, continuing with the performance highlights, for the quarter, we spent we were able to spend all our budget. Actually, we overspent, and because we're catching up with the previous quarter numbers, and then on annual basis, in terms of budget that we have or that we're given as Seda, we're able to spend at 9.93% of our annual budget on providing services and running all activities to assist the SMMEs. So we should, we're well on course to spend all the money, but we missed out by 0.07%. So we spent the 9.93 of our budget. The other parts just shows our Seda branches, our incubation. We've got 53 branches in the country. Access points that we've been able to establish in total is 58, of which 30 something was established in the fourth quarter. We are working very hard. Actually, as it stands now, we've been able to sign with other access point service providers in other rural towns and townships. With the figure is currently at 78, and we are moving towards establishing those ones and making sure that we train those service providers, but we didn't count for that because it happened after year end. But at year end, this is where we're standing. And then on the category, we also further categorized female businesses that were assisted, about 8,584, youth businesses 782. And we then missed on the target of people with disabilities, which were able to touch base with 273 of those, and we didn't achieve the target. But we are working together as a portfolio to reach out more to this target group, so that then we're able in the new financial year to meet the targets in this space. Chairperson and honorable members, on our performance that versus the previous same quarter of last year, the same quarter, we'd achieved 83% of our targets. This year, same quarter 4, we achieved 95% of our targets. Chairperson, the next slide provides then the details of the achievements and versus targets following the summary. Through permission, I will touch base on some, taking the report as read, and also maybe emphasizing more on what we're going to do on the ones that we missed, and also maybe touching base on the year-to-date while I'm dealing with quarterly achievements. On the quarterly achievements, on the entrepreneurship awareness, we're able to exceed that through the webinars and the sessions that we have. We're able to exceed that by 3,000 SMEs and cooperatives. We, on an annual basis, we're well ahead of the number that we said we were going, that we had set for ourselves. On the township and rural businesses, we're able to exceed the target. The target for the quarter was 5,000. We're able to do 6,814. And on an annual basis, we also good on that target. The incubation centers established, we were supposed to do 4 in this quarter, but we're able to do 11. and it's because we're catching up with the other quarters where we're not able to adjudicate and finalize the incubators. So then by approving 11, we're able to then meet the annual target of 11 as well, because in the previous quarters, we had not been able to do, because we're dealing with changes in policies and all other internal processes, so that we get the incubators to be approved at the board level in trying to make sure that there's proper governance in the process of approving the incubators, and we're able to succeed in that. And we've got the board subcommittees and the board approving the incubators that need to be established. It is also our efforts in making sure that we improve the governance and also improve the accountability in terms of establishing these incubators and making sure that they're aligned with the vision of the organization as well, and the mandate of the organization. So we're successful in changing the policies and the approval mandate to be at a higher level. On the number of access points, as I said, in the quarter, we're able to establish 34. However, on an annual basis, we're not able to achieve this target, which was 80. But I was saying to the committee members earlier on that subsequent to the end, we've really, because we had adjudicated by March, but we had not signed the agreements and everything, so we didn't count those, even though we had adjudicated, but we had not signed the agreements, so that we move on. So we didn't count those in these numbers. So what we then did is that post-March, we finalized, post the end of March 2023, we finalized the ones that were adjudicated, so that then we move to the establishment phase. So we've moved quite drastically on that, and we're just tying some few things so that we're able to then resume with the fully fledged training, so that the access points then become a serious extension of Seda and Sefa as well, because also Sefa is training the same point members to make sure that when SMEs walk in, they get both Sefa and Seda services. So we join hands in making sure that the services offered are also seamless, and this is in preparation also for the merger of the two entities, to make sure that we're aligned in the service offering, and that SMEs can walk into one door and get all the services. Chairperson, this is not the only time we're doing this. We started sharing office spaces in some of the regions, and we are moving towards that, where there's sufficient space to host both Sefa and Seda. We're looking at the spaces that are available, and we also looking at that, so that when the merger comes, we know whether to move from the current locations to create more space, to ensure that we have all the numbers in terms of investment officers, business advisors, to assist the clients, so that the client can move from one person to the next, and problems can be resolved if there are problems in one sitting, other than clients moving from one office to another office, and there's no seamless communication. So we're moving on that, and we are looking at the spaces, and where possible. For example, in Durban, I know that we've moved into one office block, trying to make sure that we have those seamless activities, and we're looking at others in different provinces as well, and we'll make sure that that happens, Chairperson and honorable members, so that when the merger happens, we are well prepared and we know what we need to do. Chairperson, on the issues of local markets, we're also able to meet that target, access to local markets and international markets, as I've explained, where we've taken SMEs to a number of trade missions to expose their products to the outside world, in terms of, and these are clients that we take that are ready, that we have assessed and assisted with productivity improvement, quality, and also make sure that their packaging and their product requirements meet the international standards. Only then we expose them to those markets, because we can't expose them to the international markets before they meet the requirements, and their products are all in order, and their packaging is also has proper labeling and meets all the requirements. So after we've done all that work, then we start exposing the clients to then the other markets outside the country. So it means assisted through incubation program, we're able, that's a cumulative number. We're able to achieve that number. And then productivity improvement, I've spoken about it. On the TTA, which is the Technology Transfer Assistance Chairperson, we missed the target again in this quarter. And that is because the funding that we had, we really got finished due to the demand and the size of applications that we got, because we do up to 1.2 million. So the size of the applications was bigger in terms of the quantum that the service requested. So we're not able to do all the numbers. We're only able to achieve less than what we had projected to achieve. But as I said, we've aligned and we've planned differently for the new financial year. As Seda, we continue our request and support for additional funding as we move through assisting the SMMEs. And Chairperson, I won't waste much time on the quality improvements because I've touched based on them on the summary slide, and the number of jobs created through our interventions. In the quarter, we took on 255, and also able to sustain the 455 jobs as well. And that is mainly because our interventions may not result to direct jobs at the time when we're doing the intervention. If we train a client for quality improvements or productivity improvement, or take you to access to markets, at the time we do the intervention, it may not result to an increased number of jobs. But as you then are able to sell your improved quality products and create more market through our intervention, then you see clients starting to increase the number of jobs in their factories. So we go back 6 months later to measure the impact of our services, and if our services has resulted in jobs, so that we can count real jobs at that point in time as a result of our intervention, so that we don't count jobs as we do the interventions, because they don't create jobs at that time until the intervention is done and the products are then sold into the market. And Chairperson, on the mentorship and training, we've been able to meet that target both quarterly and also annually. This program 3, which is administration, is just more internal looking, where we try to improve the innovation within Seda, and we are implementing some of the innovative ideas. For example, we will be in the current financial year introducing signing of parents, so that then wherever our clients are, they don't have to come to our offices. Once the interventions or assessments are done, they will be able to then, with the PA going to them, be able to sign, you know, and we don't need to print documents anymore. So we're trying to move away from paper, and be able to get our clients not to travel much, but our PAs to travel to clients. And then the clients are able to sign and confirm that they're happy and that the interventions are done according to what they are looking for. So that's one method that we'll be introducing in the current financial year, in line with our CRM system that we are busy finalizing, to make sure that we provide seamless and also are able to account for the numbers that we produce as an organization. So those are some of the innovative ideas that we have, and I can count more, but I just wanted to make an example of that one intervention. We're also exploring other, methods, to make sure that that is done accordingly, where the BA doesn't even have to go to the client, but those are at an early stage of development, and then the rest is just normal internal customer satisfaction vacancy rate, which we're sitting at 7.3%, below the required 10%, and then the number of digital systems being prioritized and completed in the current financial year, so that we try to show that the organization complies with technology. My screen is not moving the right direction, Chair. Apologies for that. On the HR, I won't dwell much, but we are still within the 7.3%. We are working hard, given the merger and resignations that we get. We still try to fill in the vacancies on the positions to make sure that we still provide the services to the employees. This slide just breaks down the vacancies in the various provinces, including the national office, and we prioritize to fill in the vacancies at any given point in time. On the financial report, Chair, I did do a summary. Over and above our budget for the year, we also got the additional 60 million for the flood relief, which we have completely spent. They were doing the last deliveries on the informal sector, but we spent that funding on the flood relief, which then increased our budget to 955.2 million for the year. And we spent that's 25% on core, and 91% on core and 9% on support, where we're supporting the provinces in doing the work that they're supposed to be doing. And these are just the programs that we spend the money on. And then we're saying that 9.9% of our budget has been utilized, and only 647,000 rand was not spent, which is 0.07% of our budget for the current financial year as well. I won't go into details on this because it's explaining what I've just explained in terms of the spending and the capital expenditure as well. As we said, there was an over expenditure for the quarter, which is 5.24%, but we're catching up on the previous quarter underspending that we had achieved. And this is the spending spread per provinces as well. And other provinces have spent more because there was an additional 60 million in the KZN and Eastern Cape for the flood relief, which increased their spending and as well. On the performance issues raised last year by AG, we had findings on the performance information, which is the reason why we've engaged on various systems to improve our systems internally. As I said, the CRM system will only go live end of June, which will enable us to capture all our data from the provinces on the system, so that everything is system-based and there's nothing manual. And then we're saying that we will, and then in the 23-24 financial year, at the end of this new financial year, next year, this time, we shouldn't have some of the issues that were raised by AG. We are with audit starting tomorrow for the new financial year. As I said, the systems, we implemented the systems and they were not ready for this current financial year. So we may have some issues, but we are hoping that everything will go smooth. On the governance and compliance, this is just on the board meetings and the board subcommittee meetings that took place to show that there is governance within the entity, where there were 3 board meetings in the quarter, and there were 3 strategy and performance committee meetings, and the rest, Chair, I'll take as read, but all the committees did meet in the quarter to make sure that there's compliance and governance within the organization, and these are the policies and everything and the decisions that were made by these committees. And this just details our marketing work, where we're able to do 4 pop-up markets across in various provinces in the quarter. And I won't go into details, Chair, but this is the work in terms of what we're trying to do on brand management as well, and enterprise coaching and mentorship programs as well. But I won't go into details, but this is the work that we do to promote Seda and the portfolio offerings, and also promote clients' work where we arrange pop-up markets for the clients to sell their products. And these are just key projects. that we are involved in. I won't go into detail with your permission, but there is the fishery program in the Northern Cape, and it's a primary cooperative that was started in 2018, and we are working around the clock to assist these 50 members in this co-op, and this has about 28 boats, and we are working with them to make sure that the business becomes a success, and we'll then link them up with all the stakeholders that we can link them up with. And then the other one is down Kareb, and then the Johannesburg one, Chairperson. With that, I would like to thank you, and thank you to the honorable members. Thank you, Chair.
Thank you, CEO. King, can you go back to our agenda? The next item is Seda. DG, can you lead us? Ashaya Agency, please.
Chair, it was Seda, now it's going to be Sefa.
I'm sorry. It was Seda, now is Sefa. Yes, Sefa. Over to you, Bramtolis.
Good morning, Chairperson and honorable members, Deputy Minister, DG and colleagues. If King, you may allow me sharing powers to share the presentation.
Do I do it on the Imbizo,
No, on my name, under my name, sorry.
under your name?
Yes, sir.
Okay. I'm still looking for a name.
Still Police Machamba.
Okay.
All right. What is this? Thank you, members. Yes, thank you for allowing us the opportunity, Chairperson and all members, to come and present our Q4 performance for Sefa. And I must, members, express apologies for the board chairperson. He couldn't join us today. He's got a bereavement. He lost his father. We're here today then to represent Sefa. Now my problems start off the screen not moving. So I hate. Just bear with me, Chair. The screen is frozen here. Let me stop and start sharing all over again. What the hell is going on? Come here first. Why do I have two presentations? Oh, I'm gonna be close it now. Just bear with me, Chair. I'm trying to sort out the technology glitches here. Is the final one. Right now. Just bear with us, Chair and members. We will sort this one immediately. There's a glitch here. It's fine. Got it.
Chairperson. Chairperson.
Yes.
Honorable April, I want to suggest, isn't it possible that Braking could take us through the slides in the interest of time? Because I think he would have the presentation so that the CEO could possibly just present while Braking is going through the slides, is my proposal, Chair.
Chair, we have it already. Apologies, it's sorted. This thing. Good. The thing is that there are some notes, honorable members, that I've made on my presentation. I would prefer that I presented from my side, due respect. So here's the presentation. Yeah, there we go. Thank you, Chair. I hope the presentation is visible. I will change it to slide presentation as soon as this allows me, because there's this nonsense at the bottom here. Okay. There we go. Thank you. It's moving now. I hope it's moving also on the side of the members. Chair, I'll be quick because I lost some time now. We're going to be looking at the performance highlights of the organization and then zoom into the balance scorecard and then the loan book performance. And then we look at the development impact, our post-investment monitoring, the financial performance, move into human capital performance, marketing and communications, and then the organizational governance performance. Chair members, the organization total loan book at the end of Q4 was 4.18 billion. And we approved about 656 million, which is 147% more than what we targeted for. Members will wonder why that much. Look at the previous quarters, the approvals were less because of the challenges that we faced around cash flow, where, for example, in our direct lending book, we had to pause approvals so that we were able to collect enough money to finance the disbursements. And also, we were able to achieve those over deliveries in disbursements and approvals because we were able to also earn interest. As the interest rates were escalating, we have investment income that is also in banks. So we earned more interest revenue from those investments. Hence, we're able to have those approvals under those challenging times. We disbursed.
Recording in progress.
Businesses was 253 million. And for youth-owned enterprises, it was 131 million. Moving to the balance scorecard members, Q4, the target was 400 for approvals. Now it was 446 or 447 million if you round it off. We're able to approve 655 million or 656 million, which is 147%. Regardless of the challenges really that the entity was facing in this quarter, I must submit, Chair and members, that the team was shooting the lights off because in most of our critical targeted areas, we exceeded our targets by far. Coming to disbursements to SMMEs, for Q4, the target was 400 million, and the team was able to disperse about 555 million, hence the 139% overperformance. And the number of co-ops and SMMEs financed, the target was 16,966, and we're able to do 28,000, which gave us 170% performance. Jobs facilitated for the quarter, the target was 20,994, and the team was able to do 32,498, which gave us 155% over. And disbursements to Black-owned enterprises, the target was 281 million, and we're able to do 483 million, which gave us overperformance, took us to 172%, which is almost double the target. Disbursements to women-owned enterprises, the target was 160 million for the quarter, and we did 253 million, which gave us that 158% overperformance. Disbursements to youth-owned enterprises, the target was 120 million, and we did 131 million, which gave us that 109%. Disbursements to enterprises owned by people living with disabilities, the target was not achieved because we targeted 28 million, and we're only able to do about 209,000, which gave us that 1%, which I'll speak to later. It's a long-standing challenge that we're busy addressing with the Department of Small Business Development and the Department in the Presidency for Women, Youth, and People Living with Disabilities. Now moving to disbursements to entities in the townships, the target was 100 million, and we did 106 million, which gave us 106%. And disbursements to enterprises located in rural and villages, the target was 160 million, and we achieved 251 million, which gave us 157%. And then the number of leads generated from stakeholder engagements, we targeted 20 and were able to do 78, which gave us the 390%. The annual brand visibility index, we targeted 50%, we were able to do 66, hence the 132% we see. And the annual customer satisfaction index target was 83, and there we managed to do 56, which landed us at 7%. And really it's understandable because of the challenges that we're facing as an entity. The satisfaction of our customers was not the best, because we wanted to achieve at least 83%. And then the enhanced risk maturity of the organization, we targeted 3, but we managed to achieve 3.5%, hence the 117%. Coming to the financial perspective, Chairperson and members, the cost-to-income ratio, we targeted 87%. We were really good there because we contained it at 67%, which is 128%. I'll talk to why, because there are drivers that actually made us deliver the cost containment to that level. The rand value of additional capital raised, we targeted to raise funding outside of our allocation and interest income of 85 million. We were able to raise about 123 million, hence the 146% performance there. The cost-to-income ratio for properties, we were targeting there to contain the cost at 400%, but we managed to level it out at 42%. People will say that's quite a huge one, yes, and we are aware, members. Our properties portfolio is occupied by tenants who have been on rent boycott for an extended number of years, but we're busy working with our properties team in legal to regularize those tenants. Hence, we'll see an increase in the collections later, because now we're converting those tenants who are occupying our properties to be direct tenants of Sefa and kick out those who are subletting our properties illegally. The lettable area vacancy rate, we were expecting it to be 30%, but we managed to contain it at 28%, hence the 106% performance there. Rental collections rate, our target was 40%, but the team managed to really shoot lights out there at the performance of 75%. This, members, is driven by the interventions that we put on the ground to force the illegal tenants to sign lease agreements. And also we converting electricity payments now, or access to electricity, through what you call your metered system, so that clients buy the electricity in advance to prevent Sefa paying for electricity that we cannot recover. And also the increase now in the number of tenants who are signing the lease agreements has resulted in that collections rate improvement. The ratio of emergency repairs, we were hoping that it would be 40%, but we were able to contain it at 10% within our properties. The ratio of SME tenants in our portfolio, we were hoping that we'll have about 20% of our tenants being funded by Sefa. But the uptake of our clients from the lending division is low for our properties because they are not that attractive. We're busy trying to really renovate some of our properties to be fit for purpose, but we do get other tenants who are not necessarily funded by Sefa. And then KCG, capital leverage ratio, we were expecting 6.25%, but the team was able to achieve 6.31%, which is the 101%. What this means, members, is that for every rand that KCG guaranteed with the banks were able to on lend 6.31 rand. So if you look at it in millions, if we guaranteed 100 million, you look at this 631 million, that will be on lended by the banks to the market, which is really a stunning performance by the KCG team. The percentage growth in revenues, that is now recruiting the grant income from the NTF. We were expecting that our revenues will grow by 10%, but they grew by 39%, mainly because of the we increased the book, the lending, we are getting more interest from the lending, but also the interest that we generated from the investments due to the escalating interest rates in the market. The accumulated impairment provision, that's one area, Chair, where we're seeing a challenge, because we were expecting that we will contain our impairments at 38%, but there was a challenge, it increased to 44% in the main because our clients, particularly in the direct lending, are struggling to pay. And I'll speak to that why, amongst them being the load shedding problem that reduces the operating hours. The portfolio risk, which is linked really to the impairments and collections, we were hoping that we'll contain it at 42%, but it ran away to 49%. Portfolio risk, members, is all the clients who are 60 plus 1 day behind their payments. And it's also a reflection on the what called our impairments and also the collections rate. We are hoping that we'll collect at least about 87%, but our collections rate was contained at 85%. This, members, is a reflection of the challenges that our SMEs are facing in the market to be able to what to call meet their financial obligations. Let me just move to the next one now, looking at let's move this. From the business process perspective in our balance scorecard, the turnaround times for direct lending, the target was really, we struggled at 68%. In the main, the members, the issue of turnaround time is a function really of the speediness of our processes internally, and also given that now we are using online applications. Once the client is finished applying, now you need human intervention. With the high vacancy rates of about 60 vacancies in Sefa, now we don't have enough human capital to start processing some of these deals, right from direct lending to credit and legal, including your PIM. So as long as we are having those high vacancy rates, we're still going to have that challenge, because you do need lawyers to do deal structuring. You do need a credit analyst to process these deals. And we do need our people team to look at the performance of the sector before we grant the loans. But with the conclusion rate, hopefully, of the measure, we'll be able to close and fill those vacancies. Turnaround times for wholesale, we managed to contain that at 55 days. The automation of our PIM, that was done 100% to improve our collections and automate even our debit orders. And content management, the enterprise content management, phase 1 of implementation of this has been done. And the number of clients and funding partner interventions, that is mentorships, we managed to, we targeted 43 and we managed to do about 185 mentorships, which is the 430%. It came in late because we're busy finalizing the procurement issues throughout the year, but in Q4, we were able to have them fully operational. And the number of Sefa clients improving their turnover by at least 5%. We were targeting at least 7, but we managed to see an improvement through our interventions to 52% of those clients, which gave us that 173%. And the blended first default rate of 6%, members, we managed to contain it to 6%. This speaks to clients, members, who fail to pay their very first debit order. And we're seeing that number still sitting at 6%. We want to contain it even further. Physics stats, just bear with me, Chair. Yeah, looking at people learning and growth perspective, the number of publications, we wanted 1, we did 2, which is the 200%. The biannual business conditions survey, it was done. Employee engagement index, we targeted 65 and we achieved that 65. Then percentage of staff scoring above 3.5%. We're busy currently doing the annual reviews, Chair, and that will be concluded around June. And the productivity index, establishment of the baseline, we're able to achieve 100% in that area. Chair, in summary, out of the 38 indicators, Sefa was able to achieve above 100% on 30 of them. And on 3 of them, we achieved between 75% and 99%, and only 4 were below 74%. And the last one is an annual measurement, Chair, which gave us at least 79% above 100 performance in our targets. Quickly, the commentary, I've mentioned some of these issues as I was presenting the balance scorecard. The underperformance in the approvals targets relates primarily to trap capacity challenges relating to staffing. As I said, we have very, very high vacancy rates, and trap is a very, very labor-intensive product. And as a result, we ended up putting more interns, but interns can't work in the organization and be productive. They still need to be trained, they need to be managed, and they need to be guided. The challenge of capacity there is really, really constraining us. Also, one other challenge was the uptake program of programs by the informal and microfinance. After COVID-19, most of our microfinance intermediaries really were slow in the uptake of the loans because there was a reduction in the loans wanted, but also the performance of the book was struggling and they slowed down and they are borrowing from us. And the SME wholesale, there was lack of quality business proposals there. And as a result, we couldn't achieve the approvals that we wanted. Hence, we ended at 76%. And also, looking at the development impact, we did not achieve the development impact for people living with disabilities. Members, we mention this one every year. The underperformance in this target will still continue because the target setting for people living with disabilities is not scientific. We say it's not scientific because the way the target is set, it says 7% of the population of South Africa is people living with disabilities. And then it says Sefa must therefore disperse 7% of the loans to those people. It actually ignores the fact that not every disabled person is in business. And we're engaging the department say, let's go back to the drawing board because out of the 60 million South Africans, not every able-bodied South African is in business. There's a percentage of South Africans who are in business. There's a percentage of those who are working and otherwise. So we need to extrapolate the percentage of the 7% of the people who live with disability. What percentage of them are in business? And then you translate that into a scientific target that we need to revise and put in our planning, working with that department. Hence, we're saying it needs to be revisited and make it be scientific. Collections. The underperformance in the collections was due to direct lending, which continues to struggle with collections due to the difficult trading environment that our SMEs are facing. Mainly the low economic growth, the main pandemic being load shedding, and high input costs, including the fuel prices. We really struggling with our collections there because businesses are not making enough money to be able to meet their financial obligations. Members, I spoke to this one of the approvals that the annual target there was 2.23 billion and we managed to do 1.71, which took us to the 76%. But the total loan book approvals for Q4 were above target, as I said, at 656 million against 447. Hence, we had 147% achievement. And the main drivers really were 231 million, which went to KCG, which gave us that 463% quarterly target. But if you look at the previous quarters, KCG was not doing well because banks, they take long to approve these credit guarantees. And most of them, they'll fall into Q3 and Q4. Hence, you see those high numbers. There was 66 million rands that went to microfinance, which gave us a target achievement of 165%. Wholesale SME, it was 159% with 143 million. Direct lending, we said there we had to slow down 215 million, which gave us the 81% target. I did state that we had the cash flow crunch in the space and we needed to slow down the approvals. Even this year, members, I must declare upfront that by Q2, we'll probably pause again lending in direct lending because Treasury has not delivered on the recapitalization request that we put forward. And with our collection struggling as businesses struggle, we're gonna have a shortage of cash flow, and a reasonable business person will stop lending, because that will be reckless trading if you continue lending under direct lending without that recapitalization. And the signal we're getting is that Treasury will attend to us during the midterm budget estimates. We're just gonna try and play a balancing act. As the money comes in, we'll approve. But if we run dry, we'll pause in the direct lending space until we have enough resources to deliver. Looking at disbursements, which is the money, members, that has been actually deployed in the economy. The target was 2 billion and we managed to deliver 2.43 billion, and we did indicate how that was achieved because we dispersed more than what we targeted. Direct lending, they dispersed 148 million, wholesale 406.6 million, SME wholesale at 110, microfinance 116, KCG, they dispersed 179 million. The total loan book disbursement for the year then took us to that 2.4 billion against the target of 2 billion, which we exceeded by 400 million. Quickly moving to development impact, members, the target for the Q4 with regards to SMMEs finance was 16,966. We're able to do 28,924. These were actually made up of 169 SMMEs from direct lending and 162 SMMEs from wholesale lending. SMME and microfinance, which is our main driver, was 27,717 SMMEs, with KCG giving us 876 SMMEs. The number of SMEs and co-ops finance represent about 170% of our quarterly targets. As I said, that is one of the main drivers of our developmental stats. Looking at jobs, members, the target for the quarter was 20,990.